Welcome back to the channel for another video. Today we're going to discuss how you can translate backtesting to your live trading. I was talking to a student in our Discord community and it kind of just gave me this idea that I know that some traders struggle with trying to correlate how they backtest or the results they got in backtesting to their actual live trading. So we're just going to discuss that. So starting off, I'm going to probably start with the expensive part, or the part that's paid for, not the free concepts I'm going to give afterwards. But let's just start off with the actual paid for part. If you want to actually spend a little more and invest a little more in your actual trading skill, you don't have to do this, but this is an optional thing that does help me out. Is I use TradingView. So with TradingView, you can use their backtesting software and the replay software. So just looking at their plans, I do have this essential plan that I pay for every year that does come with different perks, and what I use it for is to use this replay bar at the top, and I go through and backtest this way. I go through and use back or pre or historical data, that way I can't really see what's happening in the front, and I backtest that way so you can see more data and it's not really present. It kind of simulates a live trading experience a little more. So this is something that's really helpful for me. That's why I always use it whenever I'm backtesting. I'm glad I purchased this plan for that feature. It just helps me simulate it more and understand what's more realistic and how I would go about actually live trading in real scenarios. And of course, I'm not trying to advertise, and that's just what I use. You can use a bunch of different trading or backtesting softwares, whichever one you want to use. Most of them are paid for, so I'm just throwing out the paid for option you can use here to help improve your backtesting and your live trading here. It kind of depends on how each trade or each plan will kind of depend on, or software will depend on things like how much you're paying and how far you can go back in time, or how many bars you can see. So it is varied factors with that. So just wanted to throw out a paid for option you can do. It does help me out. As you can see, it's simulating live trading. If I want to throw a trade here, I could see what it's going to be in live time. Now it will be playing a little fast because I have it sped up here, but you can change the speed and really try to simulate it actual live time for you, if that's what you wanted to do. But yeah, I mostly just go through and just try to play it out as fast as I can so I can cover a large range of trades whenever I can. So that's the paid for option. And yeah, that's probably the only time I'll give you the paid for option in this video. So the real theories and concepts I would want to give you for free, of course, is how you can, a lot of principles to going about backtesting, how you can really think about it and understand where it can translate to your live trading at. So I'll just type some of these points down. So move that down some. So the first thing you want to do when you're actually backtesting and trying to correlate it to your live trading is you want to use realistic backtesting assumptions. And that's going to be really translated to all of this. You need to really be honest with yourself in backtesting. You need to be honest to see how, and just understand who you are as a trader. And like, you need to understand if you're going to take a certain amount of trades in a day, how realistic is it for you to have this high of a win percentage compared to where you are now. Because if you have like a 30% win percentage currently, and you backtest and have all of a sudden a 95, 99% win percentage, it might not be the truest correlation. But let me get back to these points. So the first point is using realistic backtesting assumptions. So this will include using things like understanding there are spreads, commissions. This is when you're trying to calculate your profit or losses. Understand that there's spreads, commission fees, swaps, things you're going to be paying whenever you're actually trading on your broker. You need to understand, of course, things like execution speed, how fast you can get in and out of the market, especially if you're testing like lower time frames, like on the second or few minute time frames. You need to understand that thing, and you need to understand liquidity as well, just understanding the volumes at different times that you might be trading. You need to understand all of those factors whenever you're backtesting and take those into consideration. The next thing you can do is, of course, match your execution style. And this is going to be another factor to it, is being realistic. Do you often, with your strategy, your system, do you do like limits or market orders? So you need to understand, if you're doing market orders, you need to understand that, of course, you might not always get the most ideal entry because you're trying to enter in at a time that price is actually currently moving. So you might have an inaccurate entry. This is all going back to, this part is going back to calculating like your profit or losses actual like dollar or percentage amount. You need to understand that your numbers could be thrown off a little slightly with market orders because it's rapidly moving and you're trying to get in as it moves. And vice versa with limits, you're trying to get in at a specific price, but you can understand that in real trading you might miss a certain limit order or execution because it's was too accurate maybe, and you just didn't account for spreads, so it might have just barely wicked your limit, but it missed it because of spread. So those type of things happen in live trading that you just might not consider in backtesting. So you need to just understand that and try to simulate, of course, back to the first point, using realistic backtesting assumptions and just understanding what could possibly happen whenever you're live trading. So the third point I'll give is, and this is going to be a really key one that I already kind of touched on, avoid overfitting or just making the strategy perfect, overly perfect when you're backtesting. So of course in trading you already know you're going to lose some. It's going to be some losses in there. There will be some losing streaks in there. That's just realistic. No one's going to win 100% of the trade. So if you understand, if you're going back and backtesting, you win every single trade, you're not doing it right because there's going to be some losses in there. There's no strategy that's 100%. So you need to just try to be realistic and account for some of those losses that and understand what will be really true for you. So this will be, you want to make sure you're not trying to over optimize because it is past data. This is where it'll be really helpful for you to be on the software or backtesting software and just seeing in live time, so you can't just go ahead and see like, okay, I know it's going to go up, so I'm just going to take a buy or a long here. You need to just go back in time and try to simulate live because it's going to help you understand like every trade won't be perfect. You're going to lose some, and you probably should be losing some when you're backtesting because it's just going to help you out in live trading. So I would say, yeah, that's going to be probably one of the bigger ones. I know I used to always try to overfit and try to understand that it's not perfect. It's no backtesting is going to be perfect. You're going to have loss. You need to understand those and be prepared for the real ones. You need to make sure it should translate really close to real life scenarios. So if you're going to get backtesting and get a 60-70% win percentage, it should be really close whenever you're doing that. So like I'm refining how I'm trading currently, and it's really accurate to what I've been backtesting for the last few weeks. So I backtested a few weeks and I had like a 65-70% win percentage, and this week I had a 75% win percentage or 77. So that's a little higher than normal, but it might have just been a good week as opposed to those weeks. But it's still around the same ballpark. It's not like I had a 30% win percentage and all of a sudden I backtested and I had a 90% win percentage. So you just need to understand what is true and try to adapt it and try to configure it there. So with that, another thing you can do when you're really overfit, you need to be really strict with your rules, or I should say your checklist and process of trading, or whenever you're backtesting. So you need to be really strict. It's a little easy to be lenient with some of those because you can say, oh, well, this trade might have gone through if I just skipped out on this confluence, or if I skip out on this factor. It's easy to do that when you're backtesting, but you need to be really strict with your checklist and process. This is all about trying to, like I said, match it and make it as realistic as possible. You just understand what would you do in real time. Like if you never take more than 1 or 2 trades in a day, and you're backtesting, and all of a sudden you see, okay, I have 4 trades here. You're taking all these 4 trades and you're backtesting. You're counting it for your win percentage and things like that. That's not really realistic. You need to understand who you are as a trader and understand what's gonna really work for you. Another point I would say here is with overfitting. Especially when I first started out, I would just kind of backtest and just do it wherever I saw the strategy at and try to count it like that. That's not realistic. You need to understand your own routine and who you are as a trader. And you need to understand, okay, if you only trade New York session, only backtest New York session. If you only trade London session, only trade or backtest London session. That comes with trying to really simulate the experience as real as possible. If you try to factor in things like news events as well, like if you don't trade through news events, don't try to backtest it. Just try to skip over. You can see it in TradingView when there is a news event, whenever you're doing the replay button at least. You can see there's a news event, or you can see it on other softwares as well. And that's going to help you out and generate those profit levels and those live trading results you want. So the next point I'll get is trying to tie it all together, simulate those live conditions. Paste two. So when you're simulating those live conditions, of course, it's hard to do it with. I always recommend just doing it with money. Just trying to. It's hard to do demo trading or to translate it with the live conditions with the money, real money, because you really can't throw your psychology in there and put it to the test with demo money. So I would just say, try to understand or realize this is with your real own money. Try to think about this as your real own money, your own percentages and gains, your own equity. Whenever you're doing that, it'll help you be more realistic. Like, okay, are you gonna over trade, or how would you normally trade? Do you normally take this amount of trades in a day? Do you normally take a certain percent of risk off at a certain level? Like, do you normally take partials or have a closer take profit? Would you close a trade early? Try to understand that and see where you could correlate it at in your backtesting, and then try to see potentially where you could adjust it at. So I would say this is going to lead into the next step as well. I'll write that one down now. So account for your trading psychology. In this one. So backtesting is a really good point of trading to not only learn more about your strategy, but it's also a chance for you to understand where you can get better at. So whenever you're backtesting, you can try and say, especially with the live replay bar, again, I don't want to keep advertising it, but with the live replay bar, you can really see where you might be weak at if you were in a live trade at that moment. So maybe you're a person who can't hold a trade for too long because you're getting, I guess, scared or have a little fear about how the market is moving. So whenever you're doing that, if you're going through and backtesting, you can see, okay, maybe I would close this trade out whenever it's 15 minutes in because I just don't like that it's around the break-even price. And then you keep playing or keep replaying and backtesting, but you're seeing it constantly goes through and it hits the target if you just hold it for a little longer. This could be the case when you're just testing it out. You're seeing, okay, maybe more times than not, if I just hold my own trade, it would go through hit take profit more than it hit stop loss, and I'm just assuming the wrong thing. This is where that chance for you to do it. So you can really try to account for this whenever you're trying to calculate and see like a win percentage or how profitable you would be. Understand who you are as a trader, because that's going to be really important for you to understand those live trading results, but it's also going to help you see where you can improve at and how you could potentially raise your win percentage, because you're just understanding, okay, I would normally close it out here because it looks like there's no volatility or volume. That's not good. It can help you translate, because maybe you want to just say, okay, I'm going to hold it, or I'm going to enter it at a different time frame. Maybe you want to test out a different session and see it has more volume at session, so it works out better for your strategy. That would come in there too. And along with the disc one, I've already kind of mentioned it. Understanding where you would normally be trading at. Like if you're only going to take 2 trades a day, you shouldn't be backtesting trying to fit in 5 trades a day and then trying to see or throw it into your win percentage, because maybe those 3 trades were just outside of the time you normally trade, or it's not realistic that you'd be trading at that time anyway because of other factors, or however it should be. You should understand and try to make it as disciplined as possible. And that kind of also goes to being strict with your checklist and process of the trade you're looking at. If you have that checklist and process, make sure you're trying to follow it as rigorously as possible. You're trying to make sure this is as live as possible, and you should be following that in live trading as well, just having that checklist. So you can just write it up in the corner or down here or one of these corners, or write it down in your notebook or a sticky note. You should have those 3 to 5 steps you wanted to take before every trade happens, and to make sure everyone is checked off before you're entering a trade. You're not just trying to, okay, I see 1 or 2 confluences and I'm going to skip the third one. I see 2 and 3, I'm going to skip 1. You're trying to make sure it's simulated on each one, and it's going to be a little more rigorous and a little more challenging and time consuming to make sure each one is done whenever you're backtesting, but it does pay off whenever you're translating to your live trading, because you've seen that type of result and you've seen this action play over and over again, and you understand what worked for you when you're live trading, and then you understand what you've already refined and what you can keep doing. And then I'll try to wrap this video up. So the last one I would do is track and adjust in real time. So yeah, that's going to be really key. So once you've already done those previous steps and you started backtesting and you're getting a good amount of data, I would say it's hard to say timeline because everyone trades different time frames. So we'll just say once you can get at least 50 trades under your belt and just understanding a good sample size, I'd say 100 is better, but at least 50 would be a good sample size for you to understand what your strategy is really like. As far as things like win percentage, how often you're going to take a trade in a day or a week, the number of trades, the average risk to reward, the average win size, average stop loss size, average take profit size, all those different factors. You're trading pro trend or counter trend, which one works better. You'll have a decent understanding of all those different factors once you start backtesting some, and then once you start live trading it, you should really take time to compare those trades. Like, okay, mark it up on a different broker. Make sure you have like a backtesting broker. So this is Pepperstone right here. So I wanted to use like Capital.com or Skilling or Owanda or some other different broker. Use that one as like a backtesting one, and then use this one as a live trading one, and try to compare and contrast. So keep those trades up there and see, okay, I backtested this strategy and these scenarios with this checklist, and then I had a 60% win percentage, but I'm live trading and all of a sudden I'm having a 50% or 45% win percentage. What did I do differently? Or maybe it's vice versa. Maybe you're having more success trading live than you are backtesting, which it usually doesn't happen that way because of different things like psychology, discipline, things like that. So let's just say you had a 70% win percentage live, but it was only for like 1 week, as opposed to either you had a month worth of data or 2 months worth of data, and you're backtesting that you had like 55% win percentage there. Maybe you can chop something like that up to, okay, it's just a short amount of time for me. It was a good week. Maybe it's going to bounce out next week. So you have to continuously track and adjust whenever you're going through live trading, because that's just how you make sure you're staying consistent and profitable. You make sure, there's one more fact point I should have really mentioned in here. So you want to make sure you're staying up to date with the market conditions. I didn't forget to mention that in the earlier one. So this was really, really key with point number 3, really, I would say, is staying with the market conditions. Make sure you're always staying on top of market conditions and testing this out. That is a really important part of understanding where your backtesting will fit into your live trading. Especially with me, for a personal example, I was trading a different strategy like year and a half ago, so like a year and a half ago. And I was really profitable with it until I got to, let's say, NASDAQ. It was like around early 2024 or late 2023. When it was up in this area, all of a sudden, my strategy just wouldn't work for me. And I didn't know really why, but looking back, it was because I just wasn't staying with the market conditions. I could not trade really when it was at all-time highs, hitting these all-time highs consistently. It was working better when it was consolidating a little more, doing the ranging like this. Once it started like wicking up and doing all this, it wasn't working for me beneficially. So it's important to understand like the market conditions. Like, does your strategy work better in downtrend, say uptrend, or consolidating markets? Does it work better in New York session or London session, or does it work better on earlier in the week? Like my best trading days is usually on Tuesdays, and I just know that through backtesting and live testing, comparing the past few months of data. So it might work better for some days than others. It might work better at certain times. Like it might work better only for Asian session or compared to New York session. It just kind of depends. You just need to make sure you're staying up to date with your market conditions, because that'll be helping you adjust and refine your strategy and your system in real time. So yeah, that was a really key point I wanted to mention that I didn't mention in probably part number 3 and 4. Just making sure you're understanding where and how your strategy works. Not every trade works with every type of market condition. You can just apply it anytime. Because based on my own strategy, like I mentioned, it just wouldn't work when it was at all-time highs, because I was waiting for certain confluences to get in, and I was always looking for sells as opposed to buys, which is kind of crazy because you're at an all-time high. I know you're waiting for a drop like this at an all-time high, but I was just simulating it wrong, and it wasn't working out in my favor. So I should have just understood that my market conditions. I should have just waited for probably a pullback or some type of different structure to get in. And yeah, I just didn't. So it didn't work out for me then. So it's important to understand those market conditions and making sure you understand where your strategy would fit in whenever you're backtesting and seeing where it's beneficial for you for live trading. So with that, I'll probably just wrap it up here. These are the steps I would recommend whenever you're actually backtesting and trying to translate it to live trading. Of course, I said at the beginning, you can use a paid for service or subscription and buy some software to do backtesting with live trading, with using like replay bars, going back in time and seeing, where it would be like, or what it would be like if you were live trading. So you can't really see all the bars and then you don't know what's going to happen next. It does help. But for more context wise and just for free concepts and theories, you try to use realistic backtesting assumptions. Match your execution style. You're doing limits versus market orders. Try to avoid overfitting. You should not be having 100% win percentage with your backtesting. Maybe not even like 99, 98, 95. It just kind of depends on your strategy. Make sure it's realistic and you understand how you would actually be trading or what's more closer to your own I would say return. You need to understand that, and that's only going to come through really journaling for a good amount of time, like a month or more. That way you can really understand your averages. So you want to simulate your live conditions. Try to understand that you might be wicked out certain places, or don't try to fit it around different things because you're backtesting, you use past data. You need to understand what it would be like live and taking it in the moment with those few seconds difference or those actual spread difference levels or anything like that. You want to account for your trading psychology and discipline. You know if you're going to take a certain amount of trades or if you're going to overtrade in a day. Try to factor that into your backtesting and see where you can either get better or try to just calculate it into your actual results to see what's realistic for you. And then of course just track it and adjust in real time, just trying to stay with those market conditions and seeing where you can get better at and refine your system at and your strategy and system and your checklist, I should say. So with that, I'll wrap the video up here. I'll stay tuned for the next video. It's going to touch on a little bit of this and try to translate into for the next topic of the video, I'll say. So be sure to check that one out, like and subscribe, check out some more content. I will drop some more backtesting content soon. I think I've already dropped at least one video, so make sure to check that out and like and subscribe, and I'll see you guys next video.